Hi, everybody. I'm on with Jeffrey Scott, and he's going to talk a little bit about his new ABC template and where the idea came from. And then afterwards, I will go through and show you how to use it. So, hi, Jeffrey.
Hey, Chris, and thanks everybody. It's Jeff Scott here. For those that don't know me, I am a trader full time, a retired physician, and I've been a customer of EdgeRater and HTSI for quite some time. Met Chris over the years, and that's why my picture is in the templates because I've had the opportunity of submitting some ideas before. So I hear all these things about wave counts and Elliott waves, and when I trade, rather than worrying about what wave I'm in, what I'm looking for, and this is a very rough picture here, but this is a diagram of a stock that's in a downtrend. And then from this point, wherever that point might be, has a higher high and a higher low. And the point of that higher high and that higher low is I've now defined a new trend. So whatever is to the left of my crosshairs, I really don't care. All I care about is that I've shown a reversal with a higher low and a higher high. So in an uptrend, that's what it takes. Now, as a trader, I like to buy not that first higher high. I like to find stocks that are actually pulling back. And if they're pulling back to support, even better. So where I like to make my trade then is one of three places. And this is what's on this piece of paper, although kind of a messy scratches, which somehow Chris turned into a trading system. I want to make my purchase at the pullback to the higher low. That may be a tough one to find. And frankly, that's probably perhaps a little bit of risk. My second spot I like to jump in is point B, where I've now not only had the higher low, I've now taken out the recent high. So now I have another higher high. And I like this spot because, frankly, that's a breakout of the prior high. Now, my expected move is that eventually I'm going to hit a higher high and pull back to point C, which is a higher low. So in reality, I've set a wave structure with the A being my initial low or higher low, where I might want to take a partial buy. B, where I'm breaking out above the most recent high, and then C, where I have my next retest. And then what Chris has done for me at my request is he's combined the finding of each of these spots, A, B, and C, with combinations with the traditional impulse indicators that I use, whether they are pocket pivots, mobile breakouts, kahunas, PSAR reversals, and we'll be adding to this template over time additional signals that would show me that in addition to finding me the natural reversal points, which to me are optimal buy points, it's going to combine this with the triggers. So I'm really looking for an early bird entry at a second buy point at B, and probably the safest buy point at C, where I've come back with another higher high. And what I really want to catch is what I'm calling here, and I will say I'm not an Elliottian, but I'm calling here my wave 3 up and my wave 5 up, with wave 3 hopefully the longest wave in a five wave series. So that's what this template is all about. And what better tool than EdgeRater to allow me to scan thousands of stocks. I put my trading universe, which is everything above $2.50 and 150,000 shares. I put that in a list. I hit the button, as Chris will demonstrate shortly, and I get a list of stocks in each of these buckets. I get a list of the triggers that they may be having, and then I look at the charts and determine which is at a good place to buy. And just to tease you, because Chris likes to tease me, next month we're going to get this in reverse, and I'll talk about it then. But I believe this system will also give us a great opportunity for finding great stocks to short, but that will be for March. Good luck, everybody.
That's great. Thanks, Jeffrey. And now I'm going to get in and show how to actually use the template and where you can find it. So it is in Jeffrey's category. It's called Jeffrey Scott, the High Growth Stock Doc. A little picture there of Jeffrey. You can click on his picture, and you will find then 3 templates that are in that category. There's this template we're talking about now, which is the ABC Up template. So that's the one we should be selecting. There is one setting that you can change for running this template, and that is the zigzag threshold percent. The default is set to 12%, and I'll explain what that means when you change it as we go through the template, and you will see what that means. But all I'm going to do right now is actually just run this template on a list of securities. I'm using a list of all securities between $2 and up and 250,000 shares average traded number of shares per day. I'm just going to run this template now, and as it goes through this list, there's 2,800 stocks in this list. It's then going to afterwards produce the report as normal, and once it's done that, I'm just going to close down these 2 panes on the right and the left to give us a little bit more screen real estate to talk about this template. So the simple part of the template is really the first 3 columns, or I should say columns E, F, and G, which are the A, B, and C columns. What the template has done is actually gone through, analyzed the peaks and the troughs in each of the stocks. It's calculated the percentage up and down for each of the peaks and the troughs, and it's calculated the percentage as an absolute term, and also as a percentage of the previous leg. And the only columns you really need to worry about are columns E, F, and G. If you wanted to get more into the template, then I'll explain a little bit about these other columns. We have impulse indicators, as Jeff talked about, which are your high close dojis, your PSAR breakouts, your pocket pivots, Bible gap ups, and big kahuna. If you have one of those impulses in any of the stocks, then a 1 will appear in the respective column. Otherwise, it will be a 0. And as we move through the template, sort of scrolling to the right, and I'll go to the very right-hand side of the template and explain what I mean by the troughs and the peaks. And this is where all of the calculations actually start from. Now, in order for me to explain this, I'm going to bring in essentially my drawing that I made after receiving Jeff's drawing, made my own drawing, to try and just give some terminology to some of these different peaks and troughs and the legs up and legs down. So what I've done, and what you'll find in the template, is for the up side, we're looking at this zigzag line in the upper area. Okay, and here's point A that Jeffrey talked about, point B, and point C. Okay, so the terminology in the template is that we have 3 troughs, and which are marked here as T1, T2, and T3, and 3 peaks, which are marked as P1, P2, and P3. So the numbers get bigger the further back in time you go. So as you're looking to the left of the chart and you're looking at more history, the peaks further out will have a higher number. And then drawing a line in between the peaks and the troughs, they're numbered as legs. And the first leg, which is drawn from the close price, current close price, to the most recent trough, is called leg 0. And then leg 1 is from trough 1 to peak 1. Leg 2 is from peak 1 to trough 2, and so on and so forth. That's the terminology that's used within the template. And this would be useful for you to know if you want to analyze what's going on in the template and do your own sorting and filtering. So let's take a look at the column for peaks. You see we have P3, P2, and P1, or if you want to read it as P1, P2, P3, that's fine. Just remember that P1 is the most recent peak. BSP1 stands for bars since peak 1. So for instance, in the case here of EGHT, you can see that peak 1 was at a value of 9.31, and the bars since that peak have been 32. Peak 2 was at 8.47, bars since peak 2 is 140. Peak 3 was 11.43, bars since peak 3, 229. With same idea we have for the troughs, T1 being the most recent trough, bars since the most recent trough being 3 here, bars since the medium term trough 85, and bars since the furthest trough 175. And so these columns are there for your information. They're used also for doing other calculations to give you the yeses in the ABC columns. But if you also wanted to do filtering and sorting by these columns, that's possible too. The legs then are L0, as we explained before, through L5. And the first set of columns here is the points per leg. So in this case, L0 is 0.22. That's the actual number of dollars that are between essentially peak 1 and between close, and trough 1 is 0.22. And then here L1 is the number of points between trough 1 and peak 1, which is minus 1.67. Taking that one step further, we scroll over to the left a little bit more, and now we're looking at percent per leg instead of points per leg. And so this is actual percent. So if the stock moved from a trough value of, say, 100 to a peak value of 110, then that leg would be a 10% leg. And then moving over to the next set of columns, we look at percent of previous leg. And this is where we are talking about how much the current leg moved in terms of the previous leg. So if you had a leg that moved up, and let me bring this back in again to help highlight this. If you had a leg here, T3 to P2, and that moved up 10 points, and then P2 to T2 moved down, say, 5 points, that would be essentially 50% move off of the T3 to P2 move, or leg 4. So leg 3 to leg 4 would be at 50% down. And then we have the percentages for leg 2 over leg 3, which you can also sort and filter by those values. So that's percent of previous leg, and they're named such as leg 0 to leg 1, leg 1 to leg 2, leg 2 to leg 3, leg 3 to leg 4, and leg 4 to leg 5. And we already talked about the impulse indicators, and then we have the actual final result that really we're most interested in, which is the A's, the B's, and the C's. So I ran this template just now on about 2,800 stocks, and we only have a handful that currently are at point A. You can see those all have yeses in the A column. If I sort by the B column, remember these are the stocks that are now crossing above the previous highest high, and they crossed above today. These are all the yeses for that event. And then the C column, which is pulling back to a previous peak, then these are all of the stocks that are doing that. So let's take a look at some of these stocks. I'll sort again by column A, which is the default sort. And then I'll double click, brings up a chart, and that has come up in a separate window. Let me bring that over here. All right, now the layout that's associated with this template is a layout which basically shows you the zigzag. Remember, zigzag was something that we set at the very beginning. The default is 12%, but it shows you the zigzag indicator in the top area going between the peaks and the troughs. Okay, and this is when zigzag is set to 12%. And then below that we have a volume area, and below that we have the impulse indicators. So in addition to the 5 impulse indicators, 1, 2, 3, 4, 5, we also have another indicator here, which is the clearing bar, which is Ron Black's clearing bar, as he described in his Technical Analysis of Stocks and Commodities magazine article. But that's just another indication that you can tell if a stock has started moving in a certain direction. You get a clearing bar to clear it away from all of the noise that has been happening previously. Okay, so that's your default chart, and obviously if you don't want that default chart to pop up, you do the turn off linking to template layout, and then you put your own layout in, and you can see your own preferred chart. But it is linked. This template is linked to this layout just to show you why the signals are occurring. Obviously we're looking at ABCs, and so this is a good layout for looking at ABCs. So let's explain a little bit about what's being picked up here. So first of all, we see the zigzag line has been drawn from the trough down here to the peak here to the trough here, which was lower than this trough here, so that's a lower low, then up to this peak here, and now down to this trough down here. Now this trough is a higher low than this low down here, and this peak is a higher high than this peak down here. And the stock potentially is turning around at this point. We don't know for sure at this point, but we're getting early indications of it turning around. We have a low been drawn. We've started now. We've got 3 bars, or essentially 2 bars, of an up leg. And this has all occurred at the same time as a high close doji has been fired, and that was the impulse indicator that was indicated over here. So it's turned up, and it has a high close doji. So potentially this is turning around. Obviously not guaranteed, but it's something to watch out for. And as Jeff said, the A entry is a more risky entry because you're not really sure at that point that it's turning around, and you might need a little bit more confirmation. The way the template works, by the way, is it will look for this turn up at the trough, and it will give a yes value if there's an impulse indicator within 5 bars of this turn up. So it may have occurred today, you got the impulse indicator, and you may only be 1 bar into the turn up. That might be quite an early signal, or you may actually be 5 bars in and you've suddenly got an impulse indicator come in, such as a buy will gap up or a pocket pivot indicating higher volume, to potentially support that move that's now we're thinking might be the start of this new uptrend. So let's take a look at a couple of the others. And actually, before I do that, so let me just explain more about this 12%. Obviously, what you can see in this stock, because this is a good example and why I wanted to stop here, is you may not have, if you were drawing this zigzag line yourself, you may have said, well, I think really the peak is actually this peak over here, and this isn't the next peak here. There's actually several other peaks and troughs in this chart. Now that's fine, but the software is picking up 12% moves. Stock has to move 12% before it will pick out or identify a new peak or a trough. Show you what I mean there. If we just look at the settings for zigzag on here, set to 12%. As I change this value and I come down the numbers, you see the zigzag line now changes to pick out more finer grained peaks and troughs. So the idea with the template is you can determine how fine a grain you want to pick out at on the very first page of the template info. You could change this value by double clicking the cell and just editing that value and make it a much finer grain value. In that case, you're trying to pick out more finer grained changes and not the bigger trends potentially. So that's just an example of what the zigzag percent actually means. Okay, so we'll come back to the signals, and let's take a look at a couple of the others that have come in, and I'll position my window over on the left here, and I'll position my charting window over on the right, and I'll just quickly scroll down the remainder of the A's here, and we can see why all of these are A's. We have a higher high here and potentially a higher low. Looks like it's turning around, and this time we've got various indicators have come in. The high close doji is come in, and a clearing bar has also signaled on this latest bar over on the right hand side. Look at the next one down. This is a little more zigzaggy, so even with 12% moves, this is picking out all these changes. So this stock obviously is a lot more volatile than the others, but we have the higher high, we have a higher low, potentially a turnaround. We've got the clearing bar come in, we've got a PSAR breakout also come in down here. Go down through a couple of others. Let's take one that actually has a pocket pivot. So down here we look at Orbit Worldwide, has the higher high, the higher low, and this current bar is as well as it being a clearing bar, it is also a PSAR breakout and a pocket pivot, which you can see just by looking at the columns over here. We actually have 3 of these impulse indicators or 2 of these impulse indicators have fired, in addition to the clearing bar, which is not shown in this column because the clearing bar is not an impulse indicator. It's just an indication that the noise has ended and we might be looking at a new trend. So they're point A's. You can clearly see that they're point A's. Let's look at the B's. And you may have noticed actually the ones we went through just now are also C's. C's meaning that they came down to within a percentage, and that percentage is defined in the template. And I believe they've come down to within 5% of the previous peak and started turning around. So these ones we looked at so far are all A's and C's. And now these set down here, EGHT, AGIO, they are A's only. So let's take a look at some B's, because we haven't looked at any of those. And I'll sort by the B column. And now we'll see why these are B's. And the reason is there was a previous peak over here. And today, this bar crossed above the previous peak. So that is the B indication, where it's crossing above a previous peak. Okay, this one too, ALU. Let me zoom in a little bit on ALU. The peak was drawn up here. There was a trough down here. And now the price today closed above the previous peak. All of these will be in the B category. And we can quickly scroll down through here. Ballard Power had a very powerful volume came in down here. This is indicated as a buyable gap up. As you see, the BGU is firing, the pocket pivot's firing, the high close doji's firing, the big kahuna up is firing, and you can see actually on the chart that you might not need any of those indicators to see that there's a big gap here and high volume. Okay, and price closed above the previous peak, which was over here. Now in this case, this peak was a lower high. So just something to note, we're still firing the B case even when we've had lower highs. So B is just picking out where a cross has happened above the previous peak. Okay, and it's not giving us too many signals. If it was giving us too many signals, then we may restrict that to be just in the cases where there have been previous higher highs and higher lows. But because it's only giving us a handful of signals out of 2,800 stocks, it's actually very easy, very quick to just quickly scroll through and look through them all manually. Doesn't take a lot of time, and very easy to catch these moves as they start to occur. Now, if you're thinking about trading any of these situations, the A's and the C's may have better risk-reward profiles because it's very definite where you might put your stop. Okay, you might put a stop at some level below the previous trough, or whatever kind of stop mechanism you're using. You may decide, obviously you decide yourself on how you're going to do that, but the previous low, or the most recent low, gives a definite point of if that low is now broken, then obviously this trough was not really a trough, and actually we may be continuing, or we are continuing in this downtrend. So that would give you a good place to put your stop. And then obviously you could do a quick calculation. In this case, for instance, you might say 55-ish could be a stop level. The close price today is 56.67. So I've got $1.67 of risk in this trade, but I'm looking for this stock to get back up to the 64 level. So my risk to reward ratio, my reward is greater, many times more than the risk, and so that may be the way that you decide to trade this kind of setup. Anyway, so basically that is the template. It's very easy to run, gives you a lot of information, and if you want to do further filtering, for instance, you may decide that you're only interested in stocks that have had a previous or a leg that is 200%, say, of the previous down leg. So stock comes down 50% of the previous leg, and now the up leg you're looking at, you want that to actually be 200% of that previous leg, the down leg. So, and you can do that by filtering and setting your filter criteria in any of these drop downs over here. You just drop down the little control and you do your custom sort, or you do your number filter, and you can say greater than, and then once you've said greater than, you can put in a number. And if you're doing percentage and you want to say 200%, you actually have to put in the percent sign and say greater than 200%. and this will then filter out so that the L3, L4% is now in each of these greater than 200%. But what you can see now I've set that filter in is we don't actually have any A's that have come in with that filter set. So, but anyway, it's just an example to show how you can do filtering on each of these legs, and it allows you to really customize the way that this template works. Not only can you set the zigzag % and how fine a grained move you're looking for, but once you've got that set, you can then come into the result sheet and do further filtering. So you can really customize this to your own tastes, so it's extremely powerful and very customizable. This is a great template for Edgerator, and I'm thanks to Jeff Scott for sharing his idea and providing us with this template in his category. And as we said that was for February, and next month, March, we were going to have a ABC down template, which is actually going to look for, if you can imagine, the same sorts of setups, but on the downside. So look out for that, and that's it for now. Thank you for watching.